Morning, Steve here in Chicago with the morning grain comments. Well, all markets are trading as if the deal between U.S. and China is getting closer. You've got the bond market trading lower, suggesting that the economies could heat up. You've got both the Chinese, Asian, and U.S. stock markets higher, and you have the dollar lower. You've got grains a little bit higher. I think what we're hearing is that there's only a few things left to seal a deal, and that should be completed this week. The only interesting thing is that on one hand, it sounds like they have agreed to buy $50 to $50 billion of U.S. ag goods. On the other hand, there may not be a restriction on what they buy. They can buy maybe whatever they want. It's raising some talk that they actually may buy more soybeans than some of the other products. So we'll see how that kind of unfolds. We did note that to date, January through March, world trade of soybeans are a little bit behind a year ago. China imports are down a little bit from a year ago, and we'll just kind of see how all that plays out. If China buys more from the U.S., buys less from Brazil, non-China buyers, how much they tend to buy from cheaper Brazil versus the United States, and how all that impacts the final supply and demand numbers down the road. As far as other news, looks like it's going to remain wet across the Midwest through the middle of April. We'll see how much that impacts early plantings. It's getting to the point that it'll be very critical as far as what the weather forecast is for the latter part of April, especially to get the U.S. corn crop planted on time. We also noted that the EPA is going to receive input from the Department of Energy, processing 2018 applications for exempting small refiners from biofuel laws. We also noted that the U.S. House Speaker said on Tuesday lawmakers could not take up replacement for the North American Free Trade Agreement unless Mexico passes legislation protecting workers' rights. And finally, it looks like some of the monsoon rains in India are expected to be below normal this year based on a report on the country's private weather forecasting. So basically yesterday, funds were small buyers of wheat. They sold some corn, they bought beans, meal, and oil. Continue to be short almost 70,000 wheat, 240,000 corn, and 50,000 soybeans, going into a trade deal, going to weather uncertainty, and going into what some people think might be a heated economy, which should help commodity prices and could trigger some short covering by these managed funds. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.